So Daniel, what's the other numbers did you bring?
Yeah, so I'll kind of say these numbers, and I would like to hear Josh's opinion to see if if this is just kind of data or if this is kind of really what's being reflected. So freshly constructed homes rose about 10% in July from the previous month, which was like a pretty big number. The median sale price of a home in July jumped about $15,000, and closing sale prices of previously owned homes jumped 1.3%. And so, with rates potentially coming down, that makes mortgage rates a little bit cheaper. People are clearly starting to buy homes. Maybe it's just a summer thing. It's warm, right? But is this kind of the first indicator, and that you're going to see a rally in I don't want to say a rally in housing prices, but you're going to see home sales start to pick up where we've been on pause for a little bit. So hear Josh's opinion, and then Royce can maybe analyze a chart for us and tell us if that's really what's going to potentially come up.
Well, yeah, I mean, builders and construction, they're trying to kind of thread this needle. Now that we see that rate cuts are on the horizon, interest rates should come down a little bit. So you're going to see buyers coming off the sideline, and the market's going to pop a little bit. The flip side of that is, I don't know if you saw actual production, like inventory, dipped quite a bit from June to July. I think
so you mean people were taking their listings down or just listing less?
No. I'm talking about new home construction.
Oh, new homes,
both private and like single family. So, and I'm talking about private, single family, multifamily. All of them from June to July saw almost like a 10% dip in new starting. Like when I say new construction, I mean even going back from like pulling permits, like requesting new construction, like housing, actual physical housing starts dipped by 7 to 14%, depending on private versus single family, and then completions dropped 10% on private, and then 1% on single family. And it's just like they're trying not to build all of these houses because they're trying to get in. You don't want to build oversupply. If you overbuild, you oversupply, so the market goes down. If you undersupply, the market goes up. But that's the problem that they're dealing with on the other side of it. Interest rates are going to come in, and you're going to see, like I said, a little bit of a pop in buyer supply. What happens after that is going to be the fun part. And I don't know. I don't know what that is.
Just a quick question. Is it because from what I'm seeing, especially like the stocks of the builders that build the higher income houses is seeing a reaction here and going up. But is it more of just the elites being elites? Are the higher prices of everything that's had a higher price seems to be doing okay in this economy? But if you get down to the economy or value, that it's tough. Is that the same in housing?
Oh yeah, absolutely.
So new houses, you're going to buy higher price. So,
I mean, yes. And I just for example, I had somebody come in and I've got somebody that's a cash buyer on my house, and my house is not cheap. And the fact that there's a buyer that's literally going to pay that much in cash, or wants to, continue to pay that much in cash for a house like that, is a prime example of, the haves are completely not, I don't say completely unaffected, because they still have to pay the same prices as we do.
But the haves are having.
It's just it's because of what we're doing right now, that disparity of wealth and the differentiation between the top and the bottom is just it's rapidly expanding.
Right. It's kind of validation from what I've seen, or at least